Good afternoon, this is Brad Dennis with BIS Commodities with your video update for the first week of June. First week of June, we're looking at corn and bean markets. Corn market this week has continued to settle in basically its range that we've been seeing as of late. We look at July corn trading 640 to 670, with December corn the same range, 640 to 670. This week we were expecting some better weather in the central part or east central part of Iowa. We did not get it. It's been cloudy, it's been rainy, but other places have been making progress, and that's the main thing that we're looking at here. As for new crop corn, we settled around 559, 558 today. That 573, 575 area is very tough to get through. On Monday, we're going to be looking at an average guess of progress being around 95% planted. So if we get that number, along with a few more windows that the 6 to 10 day and the 11 to 14 day are giving us, we might still be capped at that 575 level until other things arise. Maybe we talk about yield coming down or such. Obviously the crop needs a little bit of sunshine and doesn't need any more rain. We'll see how that transpires next week. Over in July corn, we did get up above that 670 level, and we did run some stops above the 100-day moving average at 672, but we could not close up there. We closed around 667 or so. With a close below that 100-day moving average, we are still in there trading those ranges on this corn market. Now, the interesting thing is, in town here, we're probably a 7.25 bid on the cash side of corn, but we can't get through that 670, 675 area on the futures, and that's because of technical trading. The last gap that we had a 676 low, gapped lower. Today we got up to 674. Couldn't quite close that gap, and then closed below that 100-day moving average, which tells us that you're still going to have, or you're not going to have as much appreciation on the board as you will in the cash market. Also today we had to deal with the Goldman roll, which was selling the Julys and then buying the deferreds. Over in the beans, a similar scenario today in that the bean market, we closed about 20 cents higher in November's, and we're still not able to take out or close above the May bean close on the front months. So July's this week got up to 1549 or so, and then was sold off. Today we closed up a penny or two in the Julys, with November's being up 22 cents. Once again, that bear spreading coming in here ahead of the Goldman roll. Now, as far as old crop is concerned, there isn't a whole lot of need for that old crop to get over where the May contract did go off. As far as the new crop is concerned, you're still trading at 1290 to a 1340.50 type level there. You got to remember, with the new crop, we're going to have more acres of it because of the difficulty of getting in the corn crop, and we have extended time on planting that bean crop. So only time will tell on that one. As far as the outsides, today we did get non-farm payrolls. We came in at up 175,000 in the non-farm payrolls, and the unemployment rate actually tipped up from 7.5% to 7.6%. This increase in the unemployment rate is due to 400, I believe it's 400,000 entering back into the working force. Basically, though, the trade looked at it as unemployment went up. That means stimulus is here to stay. There's not going to be any tapering of the stimulus package in the June time frame. So with that being put on hold, we saw the stock market rally. We also saw the dollar rally off of that as well. And the dollar is really influential on the metals market right now, not so much on the grain market. But does the grain market have to do anymore? We've had wet weather. We factored that in. We're looking at 2 to 3 million acres lost in corn planting. That's no surprise. We factored that in. On Sunday, we're supposed to have a pretty big rain event come through Iowa and hit some of the wettest areas. That's no surprise. So I think lack of interest in commodities right now is fueling, or not fueling, but is causing these corn and bean markets to basically trade ranges until we know that something on the supply side is definitely out of whack. There's still a possibility of trendline yields, and there's in both corn and beans. We are just getting in late, but if we have a very late summer or an Indian summer, that's not going to be a factor. So looking forward for the next week, you want to see what the weather charts look like, what the weather patterns are, if we do or do not get hit by big rains this coming weekend. If we don't get hit, you're going to be capped out in this corn market, and we'll see a little bit of retracement because that'll allow more to get planted. If we do get hit with it and we delay planting even further, well, then there will be issues, and everybody's going to be talking about yield drag. Also, on Wednesday of next week, we do get the USDA report for June on supply and demand. In that report, we're going to look at what the government feels about the acres that are out there, if they feel there needs to be an adjustment with it, and whether or not there needs to be a yield adjustment. Now, the last month's S&D report, they did adjust the yield below trend line to 158. Do they have to go further on that? That is one thing that will be debated out there. And once again, that is on Wednesday. So moving forward, it still is about weather. We're looking at corn to be about 95% planted on Monday night. We're looking at beans anywhere between 70 and 75% planted. So that's what the trade is expecting. If it is different than that, well, then prices will react accordingly. So that is your week in review from here at BIS Commodities. Have a great week, and we'll talk at you next Friday.